The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Inflation numbers came out today, and the markets are none too pleased. Joining us now to discuss the latest inflation data is Bob Iaccino. He's co-founder and chief market strategist at Path Trading Partners. Welcome, Bob.
Good to be here. Good to see you guys.
Good seeing you. So President Biden says that there is a very slight recession possible, but it looks like it might not just be slight, and it might not just be possible, particularly if the Fed has to increase rates again at about 75 basis points and further on if it can't tame inflation. Do you think that that's the case? And if so, what do you think that means for a risk-on asset like crypto?
Well, first of all, thanks for having me. Second of all, I hate when these things become political. One of the things that I've been talking about for months, honestly, is that a recession not only is inevitable, but it almost doesn't matter because we have economic cycles. They show up. You hope that people survive them in as good a financial shape as they can, and then we hope things build back as they should. From a perspective of what the Fed is going to do, 75 basis points coming up in November is no surprise. You mentioned earlier that the probability had jumped to about 97%. It's down to about 93 now as you were interviewing Michael. But that's a pretty much, the market is pretty much assuring us that 75 is going to happen. And I don't think that's a surprise. I think what people need to pay attention to is that the most important thing for the individual is stagflation, not recession. If we continue to have inflation in the face of a slowing economy, which is a very loose definition of stagflation, that's what hurts consumers the most. And when you bring it up towards risk assets like crypto, if people don't have risk capital, they won't invest in risk assets. Now, the interesting thing about crypto in general is, in theory, one of the whole points of a digital currency and a decentralized currency is to avoid this involvement with large banks and central banks to a certain degree, China excluded from that. And I think that's actually why crypto is not collapsing as much as I thought it would over the last 2 or 3 months. I've really been expecting a Bitcoin price closer to about 9,000. I mentioned to you guys before that I sold all my crypto in March, and I've been, I don't want to say aggressively, but actively looking for a place to get back in for what I believe to be the final push, where crypto will still have bear markets, but it won't be a bear market like this one. And I haven't seen it yet. And it surprises me a little bit. But on the other hand, when you think about what crypto actually is and what sort of the core holders of crypto believe, it's that we need to get away from these central bank affected, for lack of a better word, financial economies. And this is kind of playing out as one that's very affected.
I mean, you could talk to any undergrad at Oberlin and they'll tell you that communism in theory is much better than it was actually practiced. This is the same situation, right? You know, in theory, crypto should not be affected by central banks. It should be a hedge against inflation. It should be all these things. But in fact, it's a risk-on asset that seems to move in the opposite way of inflation. In this case, we went from 68, now we're about 19. Nonetheless, I mean, you know, you talk about stagflation, and do you think that that is the most probable thing right now, or do you think that we might have just, you know, in the end, a Fed that does the aggressive thing, that does raise rates to the point that there is a recession, that it tames prices, maybe keeps them at these elevated levels? We might not get this, and we might not get deflation, but at the very least, disinflation.
Well, I do. I think one of the things the Fed cannot do is use the word recession. The other thing I think they can't do is stop the rhetoric of fighting inflation. One thing we know about the Jerome Powell Federal Reserve is that they don't change an action until they talk about changing an action, and they haven't done that yet. There's several people on my sort of traditional investing side of things that have berated me with commentary and tweets and texts about how the Fed needs to stop because of cracks in the global economy. And yet the Fed speakers, of which I've never seen this many in my 20 29 years of doing this, the Fed speakers keep saying the same thing. And that's why I think this particular inflation number has been so damaging in the very short term post the release of the number that we've seen to both traditional assets and crypto, is because even that slight uptick is not what the Fed needs to see. We saw not only a slight uptick, but it's the second consecutive month of a fairly large uptick cumulatively versus expectations and versus the last month's reading of core month-over-month CPI. Now, the issue is that the year over year is ticking down, and it's going to continue to tick down because of base effects. I know there have been people that have probably talked about this on this show before. When you reach a certain level of inflation and then you get a year out from that, the change on a year is not going to look as dramatic. But we rose so far, so fast, that the effect to the consumer is really bad, and that's why we're staring now at the month over month versus the year over year comparison. And that core number, again, essentially, because that's what the Fed says they're looking at, is what I'm looking at. And I'll go further than that. I'll say I'm looking more at the core PCE than the core CPI, again, because that's what the Fed said they're going to do. We should never underestimate the Federal Reserve's ability to ignore market signals and do what they think is right, even if it's completely wrong. And a lot of people think that the Fed is looking at the effect of the economy to decide whether they went far enough or not, and they're not. They keep telling us that.
So, Bob, that
They're
there were
looking
those
at pricing.
There were those rumblings of a potential Fed pivot. Has these latest numbers basically erased that hope? And I'm curious that since you are completely out of crypto, or are you just completely out of Bitcoin? Are you in other cryptocurrencies? And what is your strategy then otherwise while you're waiting by the sidelines?
So a couple of things to that, and thank you for that question. I have only ever owned crypto and Ethereum and briefly Dogecoin, it was a Twitter thing, but I want to get back into both of those. I desperately want to get back into both of those, and I'm looking for a signal. Currently, my process doesn't allow me to do that. So I'm out in terms of actually holding crypto, but I'm not out of the crypto space in my mind or in my future either way. So what I'm really looking for is a couple of things, and Michael spoke to that a little bit. I want to see the regulation on those specific two larger crypto assets, as Bitcoin and Ethereum. And then I want to see how that regulation bleeds into some of the other assets. I'm the first guy to tell you that you'll have pretty much everybody you'll have on the show today and going forward knows more about the inner workings than I do. But I like assets that are going to appreciate, and I believe the core case for crypto is almost bulletproof. But as you mentioned earlier, if people don't have risk capital and they view crypto as a risk asset, which is currently the situation, they're not going to go in and support it, and I'm not going to be the first person to do that either.